Hey guys, welcome back. In today's video we're going to do accounting paper 1 for grade 12, and the paper that we're doing is for November 2024, and we're going to be tackling question 1 for the company's financial statements. As you can see, this question holds about 55 marks, and in your exams you will be expected to finish this within 45 minutes. Okay, so without wasting any time, let's get started. We're told that the information relates to Ivory Park Ltd for the financial year ended 29 February 2024. Now, it's important to note when the financial year starts and when it ends so that you can be able to accurately calculate your financial year. So if our financial year ends on the 29th February 2024, then it means that our financial year would basically start on March 2023, because if you count from March 2023 up until the year end 29 February 2024, this is a period of 12 months. All right, so let's look at 1.1. We are told to actually refer to information B for fixed asset. So 1.1.1 is depreciation on equipment for 29 February 2024. Okay, so first of all, what does depreciation mean? This is when an asset loses its value. What do I mean by that? Let's say maybe I own a business and I buy a car which is worth 100,000 rands. Obviously, a year later, that vehicle or that car is not going to cost the same amount. But it doesn't mean that when we record in our books, the original cost price changes. No, here we're focusing on how much value has it actually lost in a period of a year. This is called depreciation. And why does depreciation happen? It happens because things get old. Technology can also become outdated in this case. So the price is not going to be the same. Who's going to buy it? People are always looking for a new thing. So over time, we add all those yearly depreciation amounts together. And remember, I said depreciation is just for like a year. Accumulated depreciation means that we add all those yearly depreciations amount together over time. Now, to find out how much depreciation was recorded just for this 1 year, you ask, how much bigger did the total get this year? That means this year's depreciation is equal to the new total, which is for this particular year, and then you less the old total. And this is 472,500 minus 344,700. This gives us a total of 127,800. Remember what I said accumulated depreciation is? This is depreciations, all the depreciations added together up to this time. But now I have to calculate depreciation. Depreciation is just depreciation that is up to the end of this particular year. So you see that this one got bigger, so we need to find the difference of how much depreciation do we have, or how much has our accumulated depreciation increased for this particular year in February 2024. So I'll put these amounts here, and we get about 2 marks for this one. Number 2. Cost price of vehicles on 29 February 2024. Whatever that I'm trying to do here, I'm only focusing on what happened during this current financial year. First, ask yourself, what does cost price of vehicles mean? What is a cost price? So, cost price is actually the original purchase value, the original purchase amount of all vehicles that the business still owns as of 29 February 2024. Every vehicle that we have in this business, that we still have, that we still own, what is the original cost price purchase value? Meaning, how much is the price of all these vehicles? It only includes the vehicles that are still within the company up to date. Now, question is, what happened during the year? According to the info, one old vehicle, remember we're doing vehicles, right? An old vehicle was traded in on 1st of September 2023 for a vehicle costing 320. The trade-in value received was 153,660, and this is the following extract of the vehicle sold was taken from the fixed asset register. So here, one old vehicle which cost 240,000 rands was traded in. What is to trade in? To trade in is when you give your old item like a car or phone to a seller as part of a payment for a new item. So what do we do now? We're gonna go to our books here, and remember that we're dealing with vehicles at cost, and we can see that for this part we're actually only given last year's amount, last year's financial year amount, and we do not have the one for this current financial year, which is 2024. So I have to calculate it, right? So what must I do? We're gonna take last year's. Remember what you had last year, you open your current books with it for this current financial year. This total amount at the end of 28 February 2023 is what the company owned, or what the company had worth of vehicles. So the total amount of what the company had is this much. And now, what happened this year? This year we're told that on the 1st of September, they gave away one of those vehicles. So when they gave away one of those vehicles, it means that it no longer belongs to the company. So we have to remove that old vehicle's cost. So here we always have to take the original cost price. So we have to remove that old vehicle's cost from the total, which is 240,000 rands. So we less about 240,000 rands. And then the new cost price of the traded in vehicle cost 320,000 rands. We have to add it. So we add this one, 320,000 rands. So how much does this give us? This gives us a total of 1,330,000 rands. Remember, this is the cost of the new vehicle. This is the vehicle that does not exist within the business anymore because of the trade-in. And this is the balance at the beginning. It is what the company owned at the beginning of this year, minus what we don't have anymore, plus what we currently have, or what we currently bought. 1.1.1.3, we're required to calculate depreciation on vehicles for the year ended 29 February 2024. Remember, depreciation is depreciation for this particular year. Accumulated depreciation is depreciation for all other years thus far. So we're going to calculate depreciation for the new vehicle, depreciation for the old vehicle. So these are the two vehicles that I'm going to be dealing with. Okay, the traded in vehicle and the new vehicle. The new vehicle that was bought was actually bought on the 1st of September 2023. Remember, our financial year starts on March 2023 and it ends on the 29th of February 2024. That's a period of 12 months. So let's read the information. We're told that an old vehicle was traded in on the 1st of September 2023 for a new vehicle. Okay, so this one was traded on the 1st September for a new vehicle that we currently have, and which costed, the new vehicle costed 320,000 rands. The trade-in value received, meaning that this is how much we got when we traded in for this new vehicle. We got an amount of 153,000 rand 660. So the 320,000 rands, they depreciate at 20% per annum, which is like per year, times 20%, 64,000 rands. Now I have to calculate how many months do I have it for in this current financial year. So remember, when did we start having it? We had it because they said it was the old vehicle was traded in on the 1st of September 2023 for a new one. So from the time I had it, it was on the 1st of September 2023. Up until when? If I count from September, 1st of September, October, November, December, January, February, that's like 6. This is like a total of 6 months. Remember, I'm only looking at the months that I have had this new vehicle thus far. And how long have I had it thus far up to the end of this current financial year? I've only had it for 6 months. And how do I know that? I started counting from the time it was bought. And when was it bought? It was bought from the 1st of September, or it came into our business from the 1st of September 2023. October, November, December, January, February. So this is a total of 6 months. How much have I had it for? I've had it for 6 months. Now I have to divide by 12. And how much do I get for this depreciation? For how long? For only 6 months. 32,000 rands. So this 32,000 rands is a total amount of depreciation worth 6 months of the new vehicle that cost us 320,000 rands. Okay, so let me put this into our answer sheet. So depreciation on the new vehicles, the cost price was 320,000 rands times 20%. Remember, the depreciation rate was times 20%. It gave us an amount of 64,000 rands. Let me double check. Yeah, it gave us an amount of 64,000 rands, and then I have to times this amount by 6, which is 6 months divided by 12, and it gives us 32,000 rands.